the best assets in the world will be gold and silver going forward, with emphasis on silver. We also think that the miners, which vastly underperformed gold in this downturn, gold had a correction, they had a bear market. They've now regained turf very big. I mean, you've gone up more than 50% in the gold miners since the summer low. Nobody's pounding the table about that. More than a 50% move in a matter of 3 months. And we think they will continue to outperform gold going forward as well, just like silver. Anyway, 2023 should be I think it's going to be an historic, dramatic year in a lot of categories. There's both momentum reasons for assuming that if we get above 25 by any credible amount, you're going to launch. That's based on momentum factors. And price even has a parallel channel there, such that if you can get up over 25, you can blow that channel out. I'd rather pause before going through that breakout hurdle and rest and relax, R&R, okay, before you go through, so that when you do go through those levels, you've got plenty of energy to run. So the best place to have a pause is right before such breakout levels. Now, this breakout level, not many people are noticing it. I've not seen many other technical reports identifying getting above 25 as a point of upside chaos. We think it is. And I love the behavior here. And gold churning just below a prior peak monthly close. I like that as well, because it indicates they're getting some R&R so that when they do go through, they'll have the energy to really run. And I think the tone will change. I mean, there's been a dramatic move anyway, from just above 17 to almost 25 in silver, for example, or from $1,613 on gold to $1,900 and almost 50 in a matter of a few months. That's been pretty dramatic. But I think it'll be even more dramatic once we cross these hurdles, where suddenly those, especially large asset managers, who have not allocated sufficient assets out of this category, high risk, low reward, the stock market and other paper assets, and into the better performing assets, when they've not done that, they're in a bad position, because they either have to, shoot or get shot. Okay, they have to join. And so even though they may not like gold, in their guts and in their intellect, gold's performing. And so their competitors who happen to be more so in gold or gold miners or silver or related are beating them. So they have to make a decision. And there's a point at which I think is a psychological hurdle, and I think it's also a technical hurdle, where this gush effect could occur. And I think we're right below it right now, churning. Silver has been nodding its head at the barrier, and that barrier is up just above 25. And if you look at the action for the last 6 weeks, 7 weeks maybe, we keep getting up around 24.50, 24.70, then they knock you back down, then you cork right back up again, 24 plus. So they can't seem to keep it down. But also it's restrained just below what we predefined as what we would call our final breakout level. Okay. We think when you cross this level, and let's define it in the low 25s, okay? Various metrics come up with different numbers, slightly different, but they're all just above 25. And even the price chart has a parallel channel on monthly price chart, that if you know how to draw a parallel channel, and there's some rules of how to do it, it's pausing at the top of that channel as if it knows it's there. And I think when you clear that level, I think silver will gush. So we think that shift in the spread alone, if we weren't looking at anything else, just that, tells us that the net price direction of the two metals is back to the upside. Because the relationship historically between silver outperforming gold or underperforming gold, it happens to be coincident with the net price rise in silver and net price decline in silver. Silver's just the wild dog on a leash. It goes up more, it goes down more. Okay. And right now, I think we're in a positive mode again. We're most bullish on silver, although the mama market is the gold market. So we're constantly watching it. Now, when you look at gold, it's very interesting. If you'll stand back, and we issued this in our weekend report, for example, a simple close-only price chart, where all you look at is the monthly price close. And if you go back to 2000, let's say, 25 years or so, 48 years, and look at the action from gold moving from about 250 up to 1900 plus and then down and, and back up. When we got to the highs in 2020, above, it was at 2070 was the high. And again, you hit 2070 in March of last year. So you sort of double topped it there. But if you look at the monthly closes, so far in this rally, we've reached up toward 1950, not quite got to 1950, but the highest monthly close of this entire bull market, measuring from the bear market low in late 2015 when gold was $1,050, okay, so it doubled between there and 2020. But the highest monthly close in that period of time, since the 2020 high, the 2021, et cetera, has been 1970s and change. So we got within 1% or so of making a new high monthly close, and we're 1930 right now. So gold is literally a couple percent away from a new high monthly close for history. So put that into your noggin and think of what's going on here. So the mama market's behaving very well. Silver ratio to gold is broken out and now favors silver. And we think that 2022 was a statement year. In the sense that net on balance by the end of the year compared to the close of 2021, silver had an up year by 3%. Compare that to the S&P down 20-something, NASDAQ 100 down 30-something, T-bonds down 30-something%. And gold had an unchanged year. So even though people moaned about gold and silver, if you came in 2021, the end of 2021, and looked at where you were at the end of 2022, you had a break-even year in gold. You had a slightly positive year in silver. What assets in the world had gains last year? Not many, okay? And I think gold and silver know what's going on. And I think that is that they know that this stock market decline is only the beginning of bubble breakage.